I got to do things like travel to the Bahamas to spend a day with Sir John Templeton, an 86-year-old billionaire who was probably the greatest international stock picker of the 20th century.
When most people picture luxury retreats, they imagine tranquil villas in Bali, ocean view mansions in the Maldives, or mountain lodges in Switzerland. They see serenity, exclusivity, and high-end escape. But behind the peaceful scenes of infinity pools and private chefs lies something far more strategic, a calculated business model that the world's wealthiest investors use to grow, hide, and multiply their fortunes. Luxury retreats aren't just beautiful vacation spots. For the elite, they are multi-layered financial instruments, tools for tax optimization, brand building, real estate appreciation, and passive income generation. These retreats operate as more than luxury getaways. They're part of a global wealth machine that blends lifestyle with investment, privacy with power, and leisure with legacy. This is the untold story of how luxury retreats are financed and monetized by the rich and why they have become one of the most sophisticated wealth strategies on the planet. The rise of the luxury retreat economy. A decade ago, luxury retreats were rare. Today, they're booming, fueled by billionaires, hedge fund owners, and entrepreneurs seeking both comfort and capital growth. What changed? The world's financial elite realized that lifestyle assets could outperform traditional investments when structured correctly. A luxury retreat isn't just a piece of property, it's a revenue-generating machine that operates at the intersection of travel, wellness, and exclusivity. For the wealthy, these retreats are built not to serve tourists, but to attract a very specific clientele, high net worth individuals who value privacy, experience, and access. The rich don't see retreats as expenses. They see them as assets with personal utility and financial upside. In other words, a luxury retreat is both a vacation and a vault. How the wealthy finance their retreats. Let's start with the financing, because here's where the magic happens. Unlike ordinary buyers, the rich rarely use their own cash. They use structured financing, layered through holding companies, trusts, or partnerships to protect identity and optimize tax outcomes. Step 1. Leverage. Instead of paying full price, elite investors often finance 60-80% of the retreat using private lending or family office capital. This minimizes their upfront costs while letting them control a multi-million-dollar asset. Step 2. Offshore structuring. The property is usually held under a company registered in a favorable jurisdiction, often the British Virgin Islands, Luxembourg, or the Cayman Islands. This protects anonymity, simplifies inheritance, and minimizes taxes on gains or income. Step 3. Joint ventures. Many luxury retreats are co-financed through quiet partnerships. For example, one investor might bring capital, another contributes land, and a third manages operations. This structure allows the elite to share profits while keeping exposure minimal. Step 4. Recycling capital. Once the retreat is built and operating, it can be refinanced at a higher valuation. The investor pulls out equity through loans, effectively getting back their initial capital, while the asset continues to generate income. This means the wealthy can own multi-million-dollar retreats without technically spending their own money and still profit from them every single year. Monetization, turning paradise into profit. Now, let's talk about how these retreats actually make money. There are three main revenue streams that most people overlook. High-yield rentals. The most obvious source of income is nightly or weekly stays. But these aren't ordinary bookings. A single week in a top-tier retreat in St. Bart's, Lake Como, or Dubai can cost anywhere from $30,000 to $200,000, sometimes more. Elite retreats often rent to celebrities, royal families, corporate executives, and private event planners. They host weddings, film shoots, and wellness gatherings that can bring in millions annually. But here's the twist. Many owners only need 30-40% yearly occupancy to break even because the rates are so high. Every extra booking after that becomes pure profit. Private memberships. Some retreats aren't open to the public at all. They're accessible only to members who pay annual fees for access to a network of properties worldwide. This transforms the retreat into part of a private travel club, offering both exclusivity and steady recurring revenue. It's the same model used by private jet memberships and elite concierge services. Asset appreciation. The true wealth, however, lies in the property itself. Luxury real estate in exclusive destinations tends to appreciate faster than ordinary land, especially as demand grows among global elites seeking safe havens. For example, villas in high-demand markets like Monaco, Mykonos, or Dubai can appreciate by 10-20% annually when developed correctly. So, even if the retreat never hosted a guest, the investor still wins through appreciation and capital gains. This triple system, rental yield, membership, and appreciation, makes luxury retreats one of the most efficient wealth machines in existence. The hidden tax strategy behind it. Here's what most people don't know. Luxury retreats are also powerful tax shelters. When structured under business entities, the expenses tied to the retreat maintenance, staff, travel, renovations, and even certain lifestyle costs can often be deducted as operational expenses. In some cases, investors even use retreats as part of hospitality companies that operate globally. That means tax deductions for luxury travel, marketing events, and even fine dining, all legally justified as business activity. Additionally, when the property appreciates and is sold, capital gains can be minimized or deferred through offshore structures, reinvestment programs, or family office trusts. The wealthy don't just earn from their retreats, they store money in them, shielded from inflation and taxation. The experience economy advantage, but financial gain is only part of the appeal. Luxury retreats sit at the heart of the modern experience economy, where people pay more for transformation and exclusivity than for material goods. For elite investors, this means their retreats serve two purposes: as an income stream through curated experiences like wellness programs, private chef residencies, or business retreats; as a personal brand extension, showcasing a lifestyle that attracts more clients, investors, or partners. For example, entrepreneurs and influencers use their retreats as personal hubs where they host mastermind events, business summits, or wellness getaways, each priced at tens of thousands per attendee. In this model, the retreat becomes not just a property, but a stage. It's where deals are made, partnerships are born, and social capital is multiplied. The power of branding. Luxury retreats thrive on branding, but not the kind you see on billboards. The rich understand that perceived scarcity drives value. They often design their retreats with ultra-specific aesthetics: Japanese minimalism, Moroccan opulence, or eco-luxury sustainability. Each detail is part of the story, curated to attract a specific audience. Then, they use strategic storytelling through word of mouth, private social circles, and invitation-only experiences. You won't see these places listed on typical booking sites. Instead, access is granted through reputation and network. This exclusivity creates demand that money alone can't buy. The more secretive and limited the experience, the higher the perceived value and the more powerful the brand becomes. That's why many retreats are technically by referral only. It's a marketing strategy disguised as mystery. Partnering with luxury brands. Another hidden layer of monetization comes through strategic brand partnerships. High-end companies from watchmakers to car brands often sponsor or collaborate with luxury retreats for cross-promotion. The retreats offer an environment where ultra-wealthy clients can experience those brands in a lifestyle context. A guest might test drive a luxury vehicle during their stay, attend an exclusive watch exhibition, or sample limited edition wines. These experiences deepen brand loyalty, and retreats earn additional revenue through sponsorship deals. For elite investors, this creates a loop where brands pay to market to guests who are already wealthy inside an environment that the investor owns. Real estate meets legacy. Perhaps the most strategic reason the wealthy invest in luxury retreats is legacy planning. A retreat isn't just an investment, it's a family heirloom. Many elite investors use retreats as long-term holdings that pass wealth across generations. By embedding the retreat into family trusts or offshore entities, they ensure seamless inheritance without heavy estate taxes. The property becomes both a private sanctuary and a generational asset, something that holds emotional value while quietly compounding in financial worth. Some even transform their retreats into philanthropic foundations later in life, converting personal assets into charitable entities while preserving family control. This allows them to reduce tax burdens, maintain prestige, and leave behind an enduring symbol of legacy, turning retreats into passive cash flow machines. Once built and branded, most elite investors never personally manage their retreats. They outsource everything to specialized hospitality management firms that handle bookings, maintenance, and guest relations. These firms operate quietly under confidentiality agreements, ensuring privacy and seamless service. The investors simply receive detailed quarterly reports and, of course, the profits. The result? A truly passive cash flow model backed by appreciating assets. In many cases, these retreats generate returns that rival or surpass hedge fund yields, but with the added benefit of personal enjoyment and global mobility. The real reason the rich love luxury retreats, The wealthy don't build these retreats only for comfort or return on investment, they build them for control. A retreat is one of the few assets that delivers financial security, personal freedom, and social leverage all in one. It's private, tangible, and transferable. In a world where money moves digitally and unpredictably, owning a piece of paradise becomes the ultimate hedge, a place to live, earn, and preserve value beyond the noise of markets. Luxury retreats are not just about escaping the world. They are how the rich own a piece of it quietly, profitably, and permanently. Because in the end, the true luxury isn't the view, the villa, or the vacation. It's the power to turn beauty into business and pleasure into perpetual profit.